Hello everyone, we should be live. Welcome to another Bitcoin under the loop with myself and Jack. Jack, how
Hello,
are
guys.
you?
Good. Thank you, George. Yeah, go ahead. Sorry.
Amazing. So we'll do things as usual. I will cover the TA side of things, and then Jack will go into in depth with macro analysis, the FA side of things. So yeah, let's get right into the charts. I would say if there's anything during the stream, anything with the volume or the visibility or anything, feel free to post it in the chat. If you have any questions about the topics, also feel free to ask them in the chat. We will either answer them at the end or during the stream. So yeah, let's dive into the charts. So Bitcoin, we'll start off on the higher time frames as usual and sort of explain what we were watching previously. So previously on the higher time frames, what were we watching? Well, main thing that we were watching were these highs right here on the monthly time frame. Why? Because they don't only represent the monthly highs from here, but the area in general was just a key area together with these lows right here that got swept on the 10th of October. Aggressive downside there, right? Sweep, which we wanted to see hold, right? What did we say? We said hold on, let me zoom in a bit. Okay. We said we're bullish, right? If these are the lows that got swept, right, we should be holding above these levels. What was going to be bearish if we would see a weekly close below below this level or these levels at least. Now, a lot has happened since the previous weekly close. We closed the weekly, right, and saw aggressive downside, making a lower low. But the weekly hasn't closed yet. And as you guys know, a lot can happen in a week time frame. So what I'm mostly watching will be the weekly close from here. If we close the weekly below these levels, I will flip my bias from bullish, not necessarily to ultra bearish, but I will be neutral. Why not very bearish? Well, because I still believe Q4 and Q1 of 2026 could still be bullish. And for those reasons, even if we close the weekly below these levels, if we see, I don't know what's going to happen after that, but maybe a little bit of ranging. If we then see a strong reclaim of these levels, I do still think that we could still head for new all-time highs later this year or early in the next year. So another few key levels that I'll be watching here, right? Mostly this low here will be my main target to the downside. If we see more downside, of course. So either a sweep of that low and a reclaim, then I'll be looking for longs targeting those levels. If we bounce aggressively from here, what will I be looking for, right? Ideally, well, a reclaim of these two levels that I just talked about. Then we buy the retest, sell 120 and potentially new all-time highs. But like I said, we'll have to see some closes for that. So let's head over to some lower time frame charts, right? And take a look at, I'm just gonna change it to another chart. Yeah, it doesn't really matter which chart you take. The only difference is that the wick from the 10th of October right here is going to be lower on some exchanges. But anyways, what was the main range that we have been trading in after the 10th of October, right? After the massacre that we saw, the big sweep of all of that liquidity below 106K was the first bounce, right, to this high, then rejected, higher low to this low. That's your range set. What confirms the range, right? From the low, we went to the high, swept the highs, downside again to the lows, now swept the lows. So straightforward. What would be bullish? Well, a reclaim of this level, would be the first step, right? Some higher time frame closes there. At that point, we could be targeting range mean, lining up with the general area on the higher time frames here. And then we'll have to see if we get a high time frame break back above this local range mean, then I think we at least go for liquidity above 116 to 118K. And potentially after that, even trade into new all-time highs. But like I said, in order for us to see that, what I'm pretty much waiting for is some confirmation. So I was wrong on my earlier long attempts. I thought that this low right here would be the higher low that would hold, right? And that we would head higher from here, at least to 120. But we got that sweep and aggressive downside. Now the question is, right, is this move to the downside the breakdown? And are we heading a lot lower? Or is it the sweep of liquidity that results in a reclaim and still manages to push us towards that higher liquidity? And in order for us to know that, I'll have to see more price action personally. But yeah, what I'll be looking for here, right, in order for me to long low time frame, right, if we see some downside here, I could be betting on a higher low in this blue area, target some highs just here and here, but those will just be some day trades. But on the higher time frames, right, I really want to see a reclaim here. Then I can target up here. And the more important thing, the really high time frame, in order for us to target 120s and then potentially all-time highs, in my opinion, the key level to reclaim will be 108, 106, maybe to $110,000. So waiting out a weekly close, a lot can happen. If we close the weekly, like I said, right, we just swept the October 10th low. So if we now see bulls stepping in and we close as close to the flat weekly top that we see here as possible, that will only be acting as a draw on liquidity. And then the chances of us trading higher in the next couple of weeks increase a lot. On the other side, right, if we close below this low right here and close, in between, I'd say 100K and 104,000, then it wouldn't be looking too good. Then I think we at least take out the current weekly low and then take out weekly liquidity below 98K, right? And then we can look for a bounce again. But right here, right now, it's, for me at least, it's a waiting game. I wouldn't say we've broken down significantly yet. Could still be a sweep of liquidity that results in much more upside later this year. And that's about it from me. So Jack, take it away, I'd say.
Yeah, so before we start, so as always, I have here my Bitcoin valuation cheat sheet, my investment framework, basically. So as we did last time, what would you give the current state of technical analysis? So you said it's still a waiting game, which you also basically said last time as well. What do you think right now? What score would you give the current?
Yeah, well, like I said, I'd say neutral, 50% bullish, 50% bearish, or 100% neutral. For the simple reason, like past few weeks, that's all I've been saying. I didn't want to see a weekly close below here. And we are currently trading significantly below that level, below 106, 107,000. But there's still a couple of days left in the week. And who knows, you know. And even if we close, let's say below 107, but we close, like I said, around 105, that could still be bullish in my opinion. Then we have a long wick to the downside, and I could see an instant reclaim after that. And then this move can still be just considered as a grab on liquidity that results in more upside. So waiting game, let's wait for the weekly close and then we'll know more.
Okay, great. Yeah, so I'll dive right into it. Maybe let's put on my camera so everyone can see my face. There was someone in chat asking, hey, when can we see George's face? I don't think
not anytime soon.
No. So yeah, let's dive right into the macro part. So as you can see here, we're gonna first tackle everything macro. And basically, I explained everything last evening, so yesterday evening, in a tweet. So I'm going to share this step here. George tweeted it, so thank you, by the way. So maybe a lot of you guys already seen it before. So this is my current macro and liquidity outlook, basically. So what I said was liquidity in the US financial system is getting tight, and that's visible in the repo markets. So for those that not know what the repo market is, so the repo market is basically where banks and funds borrow and lend cash overnight using government bonds as collateral. And then, of course, super important, maybe let me say this real quick first. The reason why I'm explaining this is because this was one of the reasons we saw the drop this week. So that's maybe important to know for you guys. So last week, the FOMC, they announced its plan to end QT and restart liquidity injections. So they did this at the latest FOMC meeting, where they also cut their interest rates by 25 basis points, which was super good. And then, of course, this was the most important thing. They also said that they were conclude the reduction of its aggregate securities holdings on December the 1st. So this basically means quantitative tightening. So they will start QT on December the 1st. But, and that's also one of the reasons, but this was last week, why we dropped last week, was that Powell says rate cut in December is far from foregone conclusion. And this is important because everyone thought we were going to see rate cut after rate cut, but now Powell came and said, no, the rate cut in December is far from foregone conclusion. And that's the reason we dropped, even though the Fed said we were going to end quantitative tightening. And you can see this right here. So basically, if you look at the probability odds, it was almost at 100% that the market was thinking that we're going to see a rate cut in December. And now after the FOMC meeting, it dropped to about 63% is it at the moment right now. And George, yeah, I know you were watching as well the FOMC meeting, and you saw it instantly. So I was looking at the 1 minute chart, and immediately when Powell said that sentence, immediately the market started dropping. And at the moment it's a bit higher. So it was 63%. Now it's at 67%. So I see my friend Zero Cool is in chat as well. And basically what I said on last Saturday live stream as well with him was, I think, of course, Powell was going to say this. Powell, of course, was going to say, yeah, it's not sure that we're going to see a rate cut in December. Of course, that's normal. I don't know why everyone was thinking that he was going to say this. So I still do think that we will see a rate cut in December, although the odds are now, so the odds creeped up a little bit to 67%. But what I just wanted to say is this was one of the reasons as well why we saw the drop happening. So then let's get back to the tweet, because this is super important. Like I say here, this was mainly to address the repo problem. So what is the repo problem? So the spread between the SOFR and the Fed funds rate is widening. The wide spread indicates that liquidity is becoming scarce for dealer banks. And you can see this right here on this chart. So this is the SOFR minus the Fed funds rates. And as you can see, it's in the danger zone. And what this means is, so the SOFR is the secured overnight financing rate. And that's basically the average interest rates of all those repo loans happening overnight. So when the SOFR goes up, it's the system basically saying we're short on cash. Let's go back to the tweet. What's the cause? Well, the cause is basically the TGA rebuild plus the government shutdown, which both suck liquidity out of the system. And so the TGA, that's the Treasury General account. I got it right here as well. So this is the Treasury General account, and that's basically the US government's checking account at the Fed. So when the Treasury deposits money here, it's basically pulling cash out of the market, and that's what's happening right here. So it's going up, which means that there's liquidity getting sucked out of the markets. And let me show this real quick. So like I said in the beginning, this liquidity drain is one of the reasons that the crypto market lacks liquidity, and crypto needs liquidity, and that's why we went down the last week. And what's the fix? So the fix is, and I think the fix will be when the government shutdown ends, because then there will probably be about 150 billion released from the TGA back into the markets. Why? Because the target is 850 billion. And as you can see here on the chart, it's at the moment almost at 1 trillion. So which means that this part, so the 150 billion, as soon as the government shutdown ends, will flow back into the markets, and that will help. That will help liquidity. That will help Bitcoin. So when will the government shutdown end? Because that's when I think Bitcoin will start to move up again. And until then, I think it will be super rough for Bitcoin. If there's no liquidity, I don't see Bitcoin moving up. So we need the government shutdown to end in the US. And so, like I said, nobody really knows when it will end. But to me, these last few weeks, I always try to look at Polar Market to see basically what's the truth. And according to Polar Market, the November the 15th it will most likely be the end of the US government shutdown, so which will be in 9 days. So in my opinion, these next 9 days will still be super difficult for Bitcoin since there is no liquidity. And then normally when it will end, I think we will see kind of a relief rally, and that will be good for Bitcoin and maybe other risk assets. Then to finish this tweet is eventually the exponential expansion of treasury debt issuance plus the trillions more needed to roll over the maturing debt will force the Fed to quietly print money through the SRF. And the SRF, that's basically the standing repo facility, and that's an emergency tap that the Fed can turn on anytime. And then this liquidity expansion will grow the Fed balance sheet and eventually fuel Bitcoin and risk assets again. So I try to explain this as good as possible in as easy as possible, but I know it's boring for a lot of you guys, but this is super important. This was one of the reasons we dropped last week, but I think this will get resolved very soon, and that's, well, it will take, in the beginning it will be harsh. Like I said, if there's no liquidity, it's not good for risk assets, and then there's the good thing. At the moment, there is liquidity in the Chinese markets. And that's also super important for global liquidity and for Bitcoin, because if there's liquidity anywhere, it will eventually end up in Bitcoin. So let's have a look at global liquidity right here. So global liquidity at the moment, as you can see it on the charts, is at the moment still at a record high of 187.80 trillion US dollars. And like I said, this is driven mainly by the Chinese central bank liquidity injections and also the falling bond market volatility. And let me show my screen real quick here again, the cheat. So, and this is basically what I wanted to say about macro. So the global liquidity top will be in January 2026. But the most important things, like I said, was the Fed liquidity not looking good at the moment. Interest rates, I had to be a bit more bearish since the cut in December is, like Powell said, far from foregone conclusion. The SOFR that's above the Fed funds rates is also pretty bearish. But the end of QT, 1st of December, is then bullish. So this is the bullish part right here. US, so the DXY we didn't cover. Maybe we'll cover it in some other weeks. I'm not going to cover everything each week. Risk appetite, I didn't cover, but it's not looking great either. So it's at the moment global investor plus 17, and they are becoming increasingly cautious. So I think last time when we streamed, it was at plus 21%. And of course, risk appetite affects Bitcoin. There is a little bit risk appetite needed for Bitcoin to go up. Maybe last but not least, of course, are so I call this macro miscellaneous, is the tariffs. And as everyone knows, this is super important, which is why I gave it a 50%. And this happened last week as well. This was in Busan. So Trump meets Xi, declares immediate cut to tariffs. So I wanted to show this real quick because it's super important that this is over, because the markets, they don't like uncertainty. So now we have a little bit more clarity. So this is a very good summary. So basically what happened was that they made a deal. So tariffs on Chinese goods went from 57% to 47%, which is fine. Before that, so Trump said that he was going to impose 155% tariffs. Luckily, it's not the case. So I think we won't hear about this for maybe the couple weeks to months, hopefully. And then so the markets can be more certain and can move upwards. Let me see what I gave this. Yeah, I gave this towards the bullish side of things. So this is good. The only negative thing is that we're lacking a little bit of liquidity. But like I said, if the government shutdown ends, this will normally resolve. And then with the Chinese central bank liquidity helping as well. So this was my macro part. Then also, so last time we covered gold, which is still bullish. I think at the moment gold is at $4,000, which should pull Bitcoin upwards, especially with the 3 to 6 month lag. But then now what I want to show is the Bitcoin and Nasdaq correlation. So where do I have it? Here. So Bitcoin and Nasdaq, they trades. So Bitcoin trades as a high beta Nasdaq play. So what does this mean is that when the Nasdaq drops more than 1.5% in a day, there's a 75% chance Bitcoin also declines with an average return of minus 2.4%. So actually, the Nasdaq is a very good indicator what Bitcoin is going to do. Like, for example, global liquidity. So last year for global liquidity, there was Lynn Eldon that put out a research report that directionally Bitcoin follows global liquidity. It was about 84%. So you knew if global liquidity was going up, you knew Bitcoin was going up by 83% or something like that. And with Nasdaq, you can do the same. So if the Nasdaq is going up, let's say, there's a 75% chance that the Bitcoin will move up as well. And maybe I want to ask George for this. So George, maybe you can show your screen real quick as well and see what the Nasdaq is doing. What do you think?
Well, the Nasdaq has been in up only. It's sadly Bitcoin isn't really following it on the higher time frames, at least. Many people talked about it, that Bitcoin was mostly following stocks to the downside, but not to the upside. And I think this picture clearly confirms that. But yeah, if you ask me what I think about this chart, I would say like there's nothing here that is bearish in my opinion. We've been moving to new high after new high. And I know that at some point this is going to drop like we saw here, So we can have bigger drops, but timing those is very difficult. So would I be selling into this? Would I be shorting this? Definitely not. If there's one thing I would do, it's look to buy dips, right? So could this be like locally topping or anything? Of course, but what I like doing then is mark out some key levels to buy the dip instead of trying to time the local top, if that makes sense. So obvious levels of previous resistance were up here. This one right here and the low right here. Mostly these two levels. I can mark this out with a little box, a little demand box. Why? Well, a lot of upside towards this high, then down to this low. The highs got swept, the lows got swept, and then we saw continuation. So clean continuation range, high swept, low swept, and continuation. First level of interest would be this blue box. A lot of sideways price action, downside, telling us people were accumulating shorts in this area. Whenever that gets ignored to the upside, you can assume that to the downside, it's going to be acting as support, as those people will want to close their positions as close to break even as possible. So that will be the first level. We have some local lows resting there as well, as you can see right here. So let's say we do something like this, sweep it in there, then I'll be looking to buy the dip here. But yeah, that would be an ideal scenario. Is this likely to happen? I would say not really. What's more likely to happen from here is just continuation to the upside. Like I said, I don't see anything bearish in this chart. And a lot of people try to time tops because if you catch a short, like from here to here, it can pay off, but the amount of times you need to try, it's simply not worth it. So what I'd be doing here, right, would be first wait for at least a reversal pattern. For example, this was the closest area of resistance turned into support, as you can see clearly holding. So I wouldn't be surprised if the Nasdaq keeps pushing higher from here and trades into new all-time highs. On the other hand, if we do something like this, make a lower high and fall below here, at that point, The retest there could be a nice exit, targeting these lows right here, these lows right here, and then you look to buy the dip lower down. If the continuation to the downside doesn't happen and you reclaim this, yeah, then you target new all-time highs again. But that's about it. I don't see anything bearish on this chart for now.
So directionally, you think it's more likely to go up, which means, according to this metric, there is a 75% chance that Bitcoin should move up as well. So, like I said, according to this metric, which isn't the truth, of course, but it's something you can take into account. So, if you look at the Bitcoin and the Nasdaq correlation, this is a chart from eCoin metrics from 2020, and if the correlation still holds, Bitcoin, the fair price of Bitcoin, according to this metric, should be at 150K. So I don't think this necessarily needs to be the case. But if you look at this metric, like George said, normally the Nasdaq will continue to go up. But even if you don't know if it's directionally going to go up or down, the Nasdaq already went up a lot and Bitcoin didn't this last year. And then the fair value price, according to this metric, should be 156K. Then let's go back to our sheets. So we have the ETFs. I didn't want to cover it today. Supply and demand dynamics. So I looked at the stablecoin supply, and it's actually only up by about 1% over the last month, which is not super great. That's why I gave it neutral. I even saw it went down this last week, which is not a good sign. It's also, of course, because Bitcoin went down and all crypto went down. The MVRV score, super low. This is nowhere near a top. Usually when we see tops in crypto, that's when everyone is euphoric, and now that's not the case at all. So MVRV super low. Halving cycle theory, maybe we topped on this. Who knows? I don't believe in it. You can watch my video on it that I made. But what I wanted to cover today is actually the production cost, and I'll show it right here. So this used to be free, and you could see the chart. But the most important thing is here on the right. So at the moment, on average, it costs 116 500K to mine a Bitcoin, and the current price of Bitcoin is 102K, which is super. Well, the gap is super wide. It's a shame that we can't see the graph, but usually when this happens, when it costs more to mine a Bitcoin than the price of Bitcoin itself, this is a very good support. And so this is one of the metrics that still shows that Bitcoin price should bottom out here. So I think I wrote it even right here. Did I wrote it? Yeah. So this basically sets the floor price of Bitcoin. So if you are a long-term spot buyer, these are always good buy opportunities. That's about it for this. And then the market sentiment. And I think this is also one of the reasons we dropped. And this is what I wrote last time. I said last Friday's massacre broke crypto, and last Friday's massacre, this is when last time we streamed, but you still see the remaining skeletons of it. So the market sentiment is so bearish because of this drop where we saw everything going minus 60%, minus 70%, and it still lasts a little bit. And there's a lot of speculation actually that maybe big funds or some market maker did blow up, and I think we will see the skeletons coming out. And I think this is still one of the reasons why Bitcoin cannot go higher, because there are maybe some funds liquidating. And I saw a post on Twitter this week. It's went viral that Wintermute is, according to this guy, Wintermute is suing Binance because apparently they lost hundreds of millions on Binance because of all the liquidations and whatnot. And so what he said was, watch them deny everything last minute and to find an agreement. And actually, I think the same day or a day later, what happened was that the CEO of Wintermute, they said, what a LARP, complete bullshit, that it's not true. But who knows? But what's remarkable is that this last week, when we saw the crash, when we saw Bitcoin going to 100K, nearly all the active sell pressure on Bitcoin spot markets came from Binance actually, because Binance is this line right here. If you look at all the other spot markets, all the other exchanges, they are basically flat. So I don't know, because the rumor can be, for example, that Binance need to liquidate some assets as well for to repay back Wintermute. I don't know. It's all a bit shady, and probably there will come some skeletons out of the closets or above the ground. I don't know how do you say the thing in English. Yeah. So Marvin says as well in chat that Wintermute made an announcement saying that they're not suing Binance, though. I know, but that's the thing. Maybe they cut some sort of deal. So I know they said it and they came out of it, but you don't know what's happening behind closed doors. Maybe they made a deal. Maybe Binance paid them off in private. You can never know these things unless you're in the small circle of the top. Can I say it? Crypto money exchanges. You never know the truth. So there is probably still something going on. What that is, I don't know. I think nobody knows. But what I do know is that the sentiment is still super negative, super bearish. And that's also one of the reasons that we went down. So, of course, it has to do with liquidity shortage, with there not being enough US liquidity. But I just think the sentiment is just so low that everyone in crypto is just selling and is done with this market.
Yeah. In situations like this, where what we saw on that Friday, it's usually like you said, either we're going to see some news come out about someone blowing up or something, or it's going to need time. And if give it like a couple of weeks, and everyone will likely forget. But now I feel like what you're saying is right. The sentiment is still bearish, and everyone still think that something is going on. So either we're going to see that something was going on, or it's just going to need some more time and fade away. So,
and even if it's not Wintermute, definitely someone blew up. Like, for example, Atom went to 0. I mean, that's definitely someone blew up. So
doesn't make sense.
Yeah. So I'm almost done. Basically, I just wanted to cover the seasonality. I know a lot of people think it's a meme. The only reason I wanted to tell it is because we're at the moment in the Santa rally. So Q4 is usually the most bullish period for Bitcoin. As you can see here, on average, it does plus 78%. And at the moment, we're at minus 9%, which is almost, I think, one of the worst Novembers. Let me check. Oh, no, we had worse Novembers. But usually November is the most bullish month in crypto. So I think as soon as the government shutdown gets resolved, I think we can turn this bullish. But, and now I'm talking for Bitcoin only, I know a lot of your viewers are having also a lot of altcoins. And what I wanted to say is maybe as some sort of closing thoughts, I think this cycle, the crypto market is not what it used to be. So I think Bitcoin is somewhat decoupled from altcoins at the moment. It's almost like a different market, in my opinion. So I think Bitcoin plays more as a monetary inflation hedge, and altcoins act more as risky assets. And I think it's not really a time for risky assets to flourish, but I do see a world or the coming years where Bitcoin, like I said, acts as a monetary inflation hedge and will continue to outperform altcoins. But that's just my opinion. Yeah,
it makes sense. I agree.
Maybe just there was another question from Marvin. So he's saying, isn't liquidity really tightening up? So yeah, like I said in my tweet, at the moment, liquidity is tightening, but mostly US liquidity. And that's why you see global liquidity still going up. So this is from cross-border capital. So you can be sure this is the best global liquidity indicator there is in the markets. And as you can see, global liquidity is still going up, not by much. So liquidity isn't abundant. And like I said, this is mostly due to Chinese liquidity. So you're right that liquidity is tightening up, but it's US liquidity and it needs to be resolved. That's true. Yeah, this was it for me, George.
All right. If there's no more questions, then I think we can end it here. A little bit of a shorter stream, but guys, we have good news. We're gonna do these streams more often, as soon as next week. So we're planning on doing these streams weekly. Like I said, just focusing purely on Bitcoin, cover my part, the TA side of things, what's going to happen, both long but also short term, and then Jack goes over his Bitcoin valuation sheet, more the macro side, the FA side of things. So yeah, next Thursday we will have a new episode. So we hope to see you all then. And apart from that, take care and see you in the next one.
Yeah, thanks everyone for watching. So leave a like, leave a comment, join our Discord, and thanks a lot, George, and see you all next week. Bye, guys.
Bye.